Hi, welcome to this video day. It's the 14th of July, it's Saturday. We're just going to be looking at the potential impact of trade wars on the Forex markets going forward. And some good risk-reward trading opportunities to look out for. I also want to discuss Donald Trump's general impact on financial markets. He's already having an impact, and his impact will get greater as we move forward in our view. Now, in terms of Donald Trump, he's a very different type of president to presidents we've seen in the US in the past. He is essentially a businessman, and you've got to keep that in mind when looking at the way he is basically conducting his policies. Okay. Now, in terms of this video, I'm not taking any political sides one way or the other in terms of Donald Trump. I just want to really focus on the facts and the impact he is having and will have going forward. Now, in terms of the Forex markets, if you were to be trading the majors recently, last few weeks, I think it's been pretty dull, really. I mean, let's just take the euro, just travelling sideways, not much volatility, just consolidating, okay? Aussie dollar against the US, really low historical volatility. On the periphery, though, on the more minor pairs, there's been plenty of activity and big trends. And that's a warning of what is going to happen in the majors. Now, if you observe Trump and what he's doing, you can generate yourself some good trades or really good risk-reward trades. Our main Trump trade so far, USD long on the CNH, and a massive move to the upside. There's plenty more upside to come. Plenty of other opportunities around, which I want to discuss as well. Now, in terms of volatility increasing in the major currencies, I just think it's like the calm before the storm. Okay, and it is going to basically pick up in terms of volatility. Now, I want to discuss Donald Trump, trade wars in a little bit more detail, and potential trades to look out for, because I just feel that we are on the verge of really high volatility and some big trends. So they'll be coming back in the majors. Most of the best opportunities in Forex recently, in our view, have been in the more minor currencies. Let's just go and take a look at some key points in relation to this.
Right, let's have a look at some points in relation to trade wars. And take point number one, Europe. Will the US have a trade war with Europe? I think the odds are extremely high that it'll turn nasty. And you got the warm-up for it with the NATO summit, where, this is Trump's negotiating style, okay? Previous US presidents have complained that NATO members don't pay the required amount for their defence budgets, and that they've been ignored. And then the next president asks, okay, who comes into power, and they get ignored. But Trump, at his first summit, he's really gone for it. He doesn't want to take no for an answer. He wants a result. He's a businessman. First, diplomat second. He doesn't mind if he offends people. He offended plenty of European leaders at that summit. And he took particular aim at Germany, not just on defence spending, but on Nord Stream 2 as well, the natural gas pipeline. The Obama administration were very concerned about that as well. But Trump much more confrontational about it. And I think a lot of leaders were at the summit. Okay, Trump said everyone was closer than ever before when it finished. I think no, that isn't the case at all. They might have come to an agreement, but they're certainly not close. Many European leaders upset with the way Trump kind of went for them, for want of a better word, but that's his style. And they need to get used to it, because it's going to happen again in terms of the trade surplus. Europe's got 150 billion surplus with the US. If you looked at Trump when he was talking with Theresa May, UK Prime Minister, on Friday, he actually said, this is horrible, a disgrace, it's going to end. And, if the surplus does not come down significantly, quote, there is a price to pay, and Europe knows what it is. We all know what it is. It's tariffs, okay? 25th of July for negotiations, okay, when the EU representatives go to Washington. It's not too far away, actually, so could get some fireworks now. In terms of, is there the possibility of a compromise? There could be. When I say could be, I'm going to explain why there won't be, in my view. Angela Merkel, obviously, Germany's the biggest exporter in Eurozone. And yeah, there was a US proposal that no tariffs either side on cars. Merkel thought that was a good idea in a guarded manner. And obviously, she knows deep down that the actual tariffs are a little bit in favour of the EU. So Donald Trump does have a little bit of a point. I think Merkel knows that deep down. But it's not up to Merkel, is it? She's got to get everyone else to agree. That's the problem with Eurozone. You've got to have consensus. So it's a bit like when they had that migration solution, when they all had to find a solution. They said they had. You read the solution, and it just wasn't the solution, was it? There's too many vested interests to come up with anything significant. I think it's going to be the same with trade talks with the US. I just do not feel they can appease the US enough. Basically, tariffs will come. Okay, obviously that will impact on the euro. The euro for me is going down anyway. Without a trade war between Europe and the US, a trade war will probably help it move down a little bit quicker. For me, the euro at the minute trading sideways. I would actually change my euro bearish view to neutral if we close above 118.50. Okay, till that level is really violated, remain a bear on the rallies or on a break of the key support level, which is 115. And I think if trade wars kick in, we could well see it push through that level. It might go before, you never know. Down to 112, 108, 104. I just feel needs a spark. I think, the fundamentals in Eurozone are bearish. ECB not raising rates for a year, all the political problems, slowing growth. But a spark could be provided by a potential trade war coming to fruition. What's the best European currency to watch? Obviously, if the euro goes down, there's other European currencies that will probably go down quicker with the euro. I've mentioned it before. One of my favourites is the Czech krona, most exposed to trade tariffs if the US really goes through it. And also, it's extremely overvalued on the US dollar. Long way to go on the upside, 23.50, maybe even 26. You look at the chart, nice strong move up in USD, Czech krona, now a bit of sideways action. USD buy on the pullbacks or on the breakouts. Long-term position trade for us, this one. It's worth small size. If you can't do the Czech krona on your trading platform, a lot of trading platforms do have it, you'll get one of the other Eastern European currencies, probably. Hungarian forint or what's the other one? Polish zloty. They've all got a similar profile. Also, another currency that will go down quicker than the euro, in my view, is going to be the Swedish krona, probably the weakest of the Nordic currencies, long term. So, watch out for those. China, look at the surplus, 340 billion, more than double Eurozone. So we know that trade wars have kicked off already. 30 billion of tariffs in place, but the possibility of 300 billion more to come. Total it up, 300 plus 30, 330 almost equals the trade surplus. I think that's what Eurozone can expect. What will China's reaction be? Well, we know China's reaction is to say, right, you tariff us, we'll just do the same back, which they did on the token amount. But they've actually alluded to that they might take additional action. Of course, the US can put more tariffs on China than China can on the US, just due to the way the trade flows. So China is really angry and worried as well, because it's the worst possible time for a trade war to come to China, with the economy slowing. China has got deep problems at the moment. They do not want to see a fall in export share. Now, how could they retaliate outside of tariffs? Well, we don't know. I mean, there's one thing they could do that would really upset the apple cart, so to speak, which would be they're the US's biggest creditor, aren't they? So stop buying US bonds, or even worse, do a big withdrawal of bonds, that would cause havoc because you'd spike the US yields. That would cause massive risk off. Do I think China would do that? I think they probably thought about it. They might consider doing it, but they might sort of think, well, actually, that could do us quite a bit of damage as well. Okay. I mean, obviously, I don't know what they're actually thinking, but I know that that would cause real problems, obviously. But whatever measures they choose, let's just say, we don't know what they are necessarily, but they're not going to be sort of risk friendly, are they? The obvious currency to watch is USD Chinese yuan. Yeah, said it when the token tariffs went in. The USD was a buy. USD broke out strongly. The upside had a massive move. Now, yeah, we just have been a bit of consolidation. And then we should move higher again. A lot of people say to me, "Yeah, I probably missed it." You haven't necessarily missed the move. This could develop into one of those really heavyweight trends that goes on for a long time. Obviously, you've got to be very careful in terms of where you enter and your risk reward and so forth. But I'm very, very bullish of USD CNH, which we're tracking in the guest pairs section of the site. First trade completed with great profit. We're in the second one now, just creeping towards profit, and hopefully get some more next week. And did I say earlier I'll probably put the Czech krona in the guest pair section next week as well, so we can track it as we get into towards the 25th of July. So China, the yuan is a great tool for helping China maintain export share, okay, because obviously the currency gets weaker, the yuan, then exports more competitively priced. And it's not just to do with trade with the US. You've got to think of how many countries that are pegged to the USD that China does business with as well. So I think China's quite happy to see a lower currency. Okay, so I think that trend could be in place for a good while. What have we got next? We've got Canada, Mexico, and NAFTA. Canada, Mexico, obviously NAFTA, we'll have to see what happens there, but that's creating a little bit of uncertainty for both countries. And obviously there's tariffs going in already. Canada's received them on aluminium and steel. Probably going to get some more on autos, which will be more damaging than aluminium and steel. I feel that, the USD CAD is just getting ready to break up. And we're below the 132 level, take that level out. 135, then 138. We just really got to see the, how would I put it, USD pick up traction to the upside. Other bearish fundamentals for Canada, obviously commodity prices are falling. Crude oil is finally having a correction. Interest rate hike last week. I know it was largely discounted. We discussed it in another video, but the Canadian dollar got no strength from that. There's going to be no more interest rate hikes coming. If you look at the difference in the bond yields and currency yields, it just clearly favours the US at the moment. Canadian dollar long term going down on the USD. Mexican peso. This is a currency actually that caught me out recently. Actually, I was really confident. We had a great trade a little while back in the USD MXN when we had the big uptrend, and then we came out. We thought we'll just buy the dip. Bought the dip. Thought the dollar was oversold. Waited for a little bit of strength. Promptly got stopped out. Last week I thought again, dollar's really oversold now. I'll have another go at it. Bit of strength. Promptly got stopped out. Run onto the downside. Now we've come back in. We'll be adding to the position. In terms of obviously the style of trading we've been using here is we're trying to get the bottom. Very aggressive entries with tight stops. Okay, so I just feel now that those losses, hopefully two last losses we had, will come back really quickly. USD's got massive upside on the peso, and I like the reason why. Well, I didn't like it at the time, but the reason why the USD fell on the Mexican peso was nothing to do with economics. Okay, it was to do with just basically the new president coming in Mexico saying, for want of a better word, he wasn't going to damage the economy. He's populist, he's left-wing. Yeah, he said that to reassure the markets, but it's nothing more than the status quo. It doesn't change the fact that Mexico is one of the most exposed emerging markets in terms of trade wars. A lot of problems internally with the economy as well, which I discussed before. So for us, USD just will have a really big move to the upside. Excuse me, I'm losing my voice. So very, very bullish. Now, I put point number 4, the wild card in Helsinki. I couldn't think of a better title. But obviously, we do have a meeting coming up. President Trump and, of course, Vladimir Putin. It's going to be a really interesting meeting. And it's one that, Trump's advisors don't really want him to do, apparently. Okay, you got Trump, tough negotiator. You got Putin, a very tough negotiator. But Putin, very experienced, very cunning, very canny operator, ex-KGB, a really formidable politician. And, every politician that's had to deal with Putin will respect him. They may not agree with him. There's certainly a lot of respect for Putin. After the New York Times said that this was like the amateur heavyweight coming up against Muhammad Ali. I don't think Trump is actually an amateur heavyweight at all. Trump is no fool either, okay? And I think if you look at both men's characters, they both want a deal here. Trump likes making deals, okay? And he's made a few, hasn't he? And he likes to sort of do deals that, like he says, the previous administration couldn't manage, like, meeting with the North Korean leader. So he's itching to do a deal that improves, I think, American-Russian relations. And Putin wants a deal on the other side as well, which I'll tell you what that is in a moment. But obviously you've got all the meddling in the elections. I don't think that really concerns Trump too much. He's already expressed his views. I think that will not really be discussed in any great length at the meeting. Be glossed over. They'll talk about arms reduction. We know that. That'll be just a friendly chat, I think, about this work together in the future. Where's the deal? I think the deal would be that, obviously, Syria. The US would like a solution to Syria. And I think if Putin can appease Trump a bit on Syria, on the other side, what Putin really wants, I think, is some lifting of sanctions, or some sort of gesture. Also, not an acknowledgement as such, but the Crimea annexation, for want of a better word, being kind of taken as a given. What do I mean by that? Well, if you look at the annexation of Crimea, it's not going back, is it? Russia is not giving the Crimea back. That's just the way it is. It's now given. It's part of Russia. It stays that way. Nothing is going to change. Sanctions, anything. You could probably start a war. It's not going to change. Russia is not giving up Crimea. Okay, so there's no point in pursuing it anymore. Now, in terms of what you've got to think about in terms of why, just think from the Russian point of view. I'm not saying the Russian point of view is right, okay? But they don't see it as an annexation, do they? What they see is that Crimea as part of Russia. It was part of Russia, wasn't it? Until, I think it was in 1954-56, Khrushchev, Russian, decided to give it to the Ukraine as a gift to strengthen Russian-Ukrainian relations, okay? They had some word for it in those days, or some phrase. They were trying to improve the relations. So I think got one paragraph mentioned in Pravda when they did it. It wasn't seen as a big event because it was all done within what was technically the same country, wasn't it? The Soviet Union. Sure, Khrushchev never actually thought that Soviet Union would ever split up. So in the Russian psyche, or Putin's psyche, it was Russia. It just ended up in the Ukraine by accident. It's majority of Russian ethnic Russians or speakers, I think it's about 70%. Now, I'm not saying that argument is right, but I'm saying it's not getting reversed, okay? So if there's some sort of gesture there, and Trump has said, he said it before, he was open to talking about the Crimea. Then with Theresa May, he wasn't so open. But you don't know. I mean, Trump will do deals the way he feels at the time. What happens if there is a little bit of, how would I put it, thawing of relations, a little bit of recognition of what went on with Crimea? What would that do? I think, that just really damaged relations with European leaders even more, and make the trade war even more kind of vicious, let's say, if it transpires. I also think, these guys are going to be together for a good few hours just with interpreters alone. And, something else might just come out of this meeting that no one expects. I mean, we shall see what happens. But, it's just my theory. It might be wrong, of course. But, just thinking of a possible scenario. What have I got next? Fragile global financial system and a tipping point. You do have a fragile global economy and a tipping point, just something to tip things over. A global economy laden with debt, stock markets at near multi-year highs, etc., etc., etc. Just needs just that little spark to come in and then cause a bit of a collapse or a correction, whatever you want to call it. It could become a collapse, you never know. But a severe correction, I think, is looming. And trade wars are unsettling a lot of people, okay? And global financial system is fragile. So, it's a question for us. I think I've said it in previous videos. We favour safety over risk. USD as a long-term buy. Currencies to sell on the weakest currency of all. I'm sure regular viewers know what I'm going to say. It's Turkish lira. Saying for a while, just sell the Turkish lira any opportunity you can with good risk reward. Why? Because just Turkey. Obviously, you've got a president, and he actually warned of doing this before the US dollar surged last week, that he wanted control of the central bank. Well, that's not inspiring confidence. He put his son-in-law in charge of the economy. Well, I'm not sure that inspires confidence either. He's having rows with Germany. He's had rows with the US, Erdogan, in a very unstable geopolitical area, so to speak. Obviously, with what's going on the borders, huge capital inflows are needed in Turkey, and they're going out. I think the dollar's gone up 20% in recent months. It could go up 30 or 40%. I just don't see a recovery in the Turkish lira. It's not just buying the USD on the try. You could buy the euro, pound, Swiss franc, whichever you prefer. I think if you get you need a good risk reward entry. It's obviously getting a little bit spiky now, but good buy on the pullbacks in my view. Another currency to keep your eye on, I think I've mentioned it in a recent video. What currency is the most insulated against trade wars in the world? It's Switzerland, or the Swiss franc. So the Swissy looks a good buy. Okay, longer term on the risk currencies. From our perspective, you obviously see how these trade wars progress, but we favour safe over risk at the moment. Just giving you a few ideas of some pairs to look at, and we'll just see what happens with them. But interesting times ahead, and looking forward to the 25th of July when the negotiations start between Europe and the US. All right, I think I've said all I need to. Don't think I've missed anything out. Missed anything out. I'm losing my voice anyway, so I'm going to wish everyone a good day. Thank you very much for watching me as usual. Take care and have a good